Good morning, everybody, and welcome to the Siler Wealth Management video blog. Today is Wednesday, September 14th, and the last three sessions have been extremely volatile. And I first want to apologize. Have not done a video blog in about a week and a half, but we've been extremely busy here at the office. And I have to credit you folks out there because you're keeping us busy. And a few weeks ago, I put it out there that if you needed a college plan proposal, give us a call. We'll take care of it, and we will not charge you for it. It'll just give you an idea because you'll be shocked if you have a younger child or grandchild, anywhere 12 or less years of age. You'll be shocked how much college is going to cost when you take in consideration many elements, and most importantly, the inflation of the cost of college, which is outpacing inflation of the regular economy. So, pretty interesting stuff. And we've done a lot of college plans lately. And one thing, what I've really noticed, and I have to credit you, and we've been educating, we've been doing our webinars, you guys have been joining, so you're learning something. That's what this is all about, all right? It's about your education, and if you end up needing some help, we hope that you call us, and you have. Nice thing that over the last couple of months, really over the last month or so, we've been saying you got to be cautious here at this market, that we saw really 50 trading days in a row without a 1% move either up or down. That's unprecedented. We don't see that. And then all of a sudden, on Friday, we had the 400-point drop on the Dow, followed by Monday's 240-point rally, followed by yesterday's 240-point drop. So here's what we're looking at here. When you have a market that is stretched, and just stretch with no volatility, when you stretch a rubber band, and you stretch it, it doesn't move that much. Obviously, it's flopping around when it's not stretched. So the market has been stretched for 50 sessions. That, again, it's unprecedented. Without 1% move, it's being stretched with lack of volatility. There's no volatility, which is complacency. And basically what happens during that period of time is people, we're okay. We're not doing much of anything. Not buying, not selling. We're just kind of letting the market do what it does. And that does tend to happen in the summer, but not to this duration, not over 50 trading sessions. So, we had this feeling things were not looking right. And the volatility index, even though the market wasn't really doing much, the volatility index was maybe really hitting some extreme lows, meaning that the fear factor was nil. There was no fear factor out there. And typically when the VIX index, the volatility index, gets down to certain levels, we feel it's ready for a correction. We feel it's ready for some kind of volatility to the downside, and we saw that. So what we've been doing over the last couple, 3-4 weeks is we've been accumulating cash on the sidelines, which is really strong when you have markets that are going down. Now, obviously, if you have performance, which so far this year we have had really good performance, so because things can happen and you can pull some investments out, put some cash on the sidelines, and the market skyrockets. I was willing to take that risk because I didn't think it was going to happen. And if so, I had some room to play because we're outpacing. We're a little bit better than the market anyway. So that being said, we took some cautionary measures. Market took a hit. We bought some ETFs that actually, if we saw the volatility increase, we'd make some money on. We did, and that was a good move also. But what's nice is you folks out there are bringing your portfolios to me and saying, hey, will you please take a look at this and see if it's appropriate for what my investment objectives or my time frame is. And that's great because we do free portfolio reviews. You know what? And if we can help you, that's fantastic. If we can help you not hurt yourself, that's great. So keep up the good work. Continue to come talk to us. We will certainly help you. The college funds, it's a great idea. It's funny, we just saw a client yesterday has a 9-year-old child. 4 years of school in a Florida State school is going to cost $119,000. So he was very surprised, had no idea, and we'll spell it out for you. Here's what you need. You need to put in $6,100 a year, or you can do that $510 a month until they turn 18, or you can put a lump sum of this amount. So it really spells it out for you, and it's part of our financial planning as well. So anyway, that's great. So look, the market is really been on the defensive. We're seeing a little rebound today. Don't trust the rebound because it was much higher. It's kind of faltering here as the morning goes on. We're about to open. Again, I would be very cautious right now. I want to go over two incidents that happened over the last couple of days that are either hurting part of the market or helping part of the market. And I'll talk about, first of all, the Wells Fargo situation. Wells Fargo, the largest bank in the country, was until it pulled back a little bit, and then you saw that they looked like they had a massive fraud amongst the ranks in which they had to fire 5,300 employees. Now, according to Wells Fargo, I saw an interview on Kramer, the CEO, saying that, hey, it really amounted to about 115,000, believe it or not, that sounds like a lot, 115,000 accounts at about $25 in fees per account. They've reimbursed it. But here's what I don't like about it. And this is someone who we have owned Wells Fargo for a long time. So this is disconcerting, and we're going to get out of it at some point, and we're going to get out of it any day now. So my point is, I think that the earnings are going to be hurt on Wells Fargo. I think that the banking system was just starting to get the trust back, and then all of a sudden, Wells Fargo, to create bonuses, they go out and create fictitious accounts or accounts that their clientele did not authorize, so they can achieve these bonuses. Then they'd quickly reimburse it, and it's really a sad thing that happened. So the whole banking sector is going to be hurt a little bit by it. Now, rising interest rates helps the banking sector, but Wells Fargo, to me, it's disgraceful that what they did. So that being said, it's almost as disgraceful as the professional athletes, including my team, the Miami Dolphins, had 4 players kneel on the sideline during national anthem. And I'm just throwing that out there because, as much of a fan as I am, I think it's extremely disrespectful to our military and to the people that built this country. So, keep doing it, and you're going to get more haters out there, I'm sure. So, another incident that's happened, and it's actually helped our portfolios, is Samsung. It's really interesting, but it just goes to show you that even though you think something is a great company or a great stock, anything can happen. No one expected that the new Samsung Galaxy 7 notebook, or whatever they call their phone, would catch fire. And it has been banned from air travel, and not to mention Samsung has recalled all of them, saying if you have bought one of these phones, please return it for a full refund. So obviously that helps Apple, and Apple shareholders have enjoyed that benefit. And we own Apple. We'll just disclose that. I own it personally. We have most of our clients own it, and we're all doing really well on it. We have nobody that's not in the positive. In fact, we've owned it for many. I was looking at a client's account yesterday. It's 5-6 years we've owned it, so we have a lot of money in it as far as profits. But my point is, anything can happen, and you call Apple a pretty safe bet. Some people do, but when you're in the stock market, it's all a risk. You don't know that there's a report that comes out and says using the Apple iPhone causes brain cancer. That kind of stuff can happen. So, don't be so complacent in the market. Look at the data, do the research, do the homework, or use someone like us. That's what we do. We're going to have an event on October 27th, and we will invite, it's going to be by invitation only. So if you want to be invited, it's going to be a great event. Talk about the election, how it can affect your portfolio, and I have some guest speakers as well. It'll be local in Altamont Springs. I guess I'll say where it's going to be, Cafe Murano, which is one of my favorite places, on October 27th. So you can just message us, and we can get you an invitation. Anyway, in the meantime, if you need any help with anything, give us a call. The college reports, the analysis, we'll still do those for free. If you want us to do the portfolio analysis, we'll do that as well. But anyway, it's been a pleasure bringing this to you today. I hope everybody has a great one, and I will talk to you soon. Thanks.